Most traders think an order block is just the last bullish or bearish candle before the impulsive move, but that's just part of the story. In this guide, I will show you how smart money actually creates order blocks and how to identify high probability ones. By the end of this video, you will have a profitable order block strategy. So it starts with a liquidity sweep. As you can see, here's our liquidity sweep here. So what we can see is price came back and swept these highs here before giving us that impulsive move. So before the market can move in its intended direction, it first has to sweep liquidity, which is these highs here. Once the liquidity is swept, there's no reason for price to keep going up in that direction, making this a strong clue that we have reached the top of the range. Then the liquidity sweep is followed by this impulsive move to the downside, which breaks this structure point right here, giving us our break of structure. This confirms that there's a new direction and sellers are in control. It represents a genuine shift in market control. Also, within the impulsive move, we want to see a fair value gap. This is basically evidence showing that there's strong institutional move. This is where price will show an imbalance in the market, and these gaps act like a magnet, attracting price back to rebalance before the trend continues. Now we can mark out the order block. And in this example is the last bullish candle before the impulsive move. This represents where institutes have placed significant sell orders, and price will revisit this zone and smart money will defend its position, making it a high probability area for selling. So the last confluence is our order block in the extreme zone. This is the 75% of the range, which is here. In this bearish setup, I want to enter in the premium as I'll be taking a sell. So I draw the Fibonacci tool from the top to the bottom of the range, and the 75% zone will be my extreme premium zone of the range. And I also use the 75% as my entry, as you can see here, with my stop loss at the high, which is at the 100%, and my take profit at the 0. This creates a consistent 3R risk to reward ratio, meaning every winning trade has the potential to return 3 times what I risk. And the reason why I use this removes emotion from all my trading and maintains consistency across all my setups. So this is the setup I look for every day. It creates a simple narrative. Price hunts for liquidity, confirms direction, moving impulsively to the downside, leaving an imbalance or a fair value gap, creating the order block, then returning to that zone for an optimum entry. Now let's look at a chart example. Before we go to the live charts, I just want to show you that this is an actual example of a trade that I took. Here's a page of my journal which shows you when I entered the trade, how much I was risking, what kind of model it was, and I've even got screenshots of when I first entered the trade. So this here will show you how it actually looked like. So this is when I first entered the trade. So you can see there, and then if we go back to the journal, this is when I then hit TP. So this is not just an example I've just pulled out of thin air really, but yeah, as you can see, I journal my trades, and I took this on the 5 minutes during the New York session. If you're interested in using this journal, just click the link in the description below. So now I'll show you exactly how I took that trade example. And this is exactly how the charts looked when I first went on them. And the area that I'm interested in is this here. So from here all the way here. So this is basically the range that I'm interested in. So the first thing that we need to mark out is the liquidity sweep. And as we can see here, price was basically consolidation in this whole zone here. And then we had our liquidity sweep where price went up and swept these highs here. So I'll just draw it from this point. So I'll just mark that out as our liquidity sweep. And then once we swept liquidity, what do we see? Price gave us this impulsive move, tried to go up again, but continued all the way till this zone. And what did we get in that impulsive move? We got our break of structure, which is this point here. So I'll just mark that out. That's our break of structure. And the next thing we need to mark out is the fair value gaps. And as you can see, we've got this big fair value gap here. We've even got another one here where price came back and filled. And then we even got another one in here. And we got a little small one here, but I won't mark it out. So these are our fair value gaps. I'll just label them so you know what these are. Okay, so now we've got our fair value gaps. We can actually draw out the order block. So the order block would be this last up candle before that impulsive move. So this is our order block. So what I'll do actually is I'll just delete all these here just to keep the charts clean, but you can see where our fair value gaps were. And a fair value gap is just basically a 3 candle pattern where there's a gap between the first candle and the third candle. So the candle in the middle, which is the second candle, will have that gap. So now we've got our 3 confluences, our liquidity sweep here, our break of structure there, and we've got fair value gaps. And we've now drawn out the order block, which is our 4th confluence. Now we can draw the Fibonacci tool. So we're going to draw it from this high to this low, which is from the top to the bottom of the range. So I'm just going to go into the settings so you can see what levels I've got. So I've got 0, 1, and 75. So the 0 represents 0%, the 1 is the 100%, and the 0.75 is the 75%. And like I said, I want to see my order block within that 75% zone. And this order block perfectly lines up with it. So now what I do is I enter off that 75% zone right there. And I take my stop loss to the 100%, which is basically the top of the range. And then my take profit will be at the 0%, which is at the bottom of the range. And this gives me a consistent 3R trade. Okay, so as you can see, I'm risking 1,000 to make 3,000, which is basically the same risk to reward, which is 3R. So I'm risking 1,000 to make 3,000, which is 3%. So let's play price forward and see what happens. Okay, we've just been tapped in. So you can see price has gone into that 75% zone and it already looks like it's rejecting. Let's play price forward and see what happens. Okay, so we got that big rejection, price comes back. There we go. And that's it. TP has been hit. And that's given us our 3R, which you can see there. So I'll just stretch this out here. Okay, so now you can see price tapped in and gave us that 3R. So let's just look at the examples of the screenshots that I took. And you can clearly see that looks identical to that same move. And this was taken on the 17th, sorry, of June. And with the time there, so I can't actually fake these things. And this is when I took the entry. So this was at 2. If you watch this video this far, you now have yourself a profitable order block strategy. Simple enough for a beginner to understand. And this is the same repeatable process that I base my trading around. If you are interested, click the link below and I'll teach you exactly how it works and how to find similar opportunities like this in the market. If you enjoyed this video, don't forget to subscribe and turn on your notifications, because every week I will share practical trading content designed to help you trade with confidence through simplicity. Remember, simplicity is the ultimate form of sophistication. Thank you for watching, and I'll see you in the next one.